Lisa Ellis is partner and senior equity analyst at MoffettNathanson. Welcome. Thank you for joining me here.
Hi.
And I remember when we were talking about this a year ago, it still felt like kind of in the depths of the pandemic. And you said, just wait. When people start traveling again, cross-border payment volumes, like that was your bull case. And here it is playing out.
Yeah, absolutely. And we still have a little room to go. It's been a big year, but Visa yesterday, their cross-border travel volumes were actually still up almost 60% year on year. Total cross-border international spending up about 30% year on year. And that's really what drove the beat. You know, they beat both on top line and bottom line because that is very lucrative, high margin revenue as well when it comes in.
MasterCard, have they reported yet?
They come in tomorrow morning.
Okay.
And we're expecting similar results from MasterCard.
You know, the two of them, during the whole blockchain DeFi kind of boom, there was a moment I remember asking you about it, saying, well, wait a minute, could they finally be disintermediated, right? Could the stock duopoly of the 2010s be coming to an end here? How did they end up defending their core business? Or did that tide just recede as the Fed tightened and kind of crypto became less interesting and maybe those who were hoping to disrupt didn't quite make it across the finish line?
Well, what they've done pretty effectively over the last couple of years is really separate the core payment infrastructure from the value-added services that they provide on top of that. Things like fraud detection, things like those alerts you get to your phone, spending management, all of the kind of consumer protections around your cards. And you'll hear more and more from them talking about value-added services, et cetera, because what they're doing is they're separating kind of how they add value from that core underlying infrastructure, which is being modernized, but through things like blockchain, really stable coin networks, CBDCs, or even just through some of the newer networks that like the Fed is rolling out called FedNow. It's coming out later this year. So we are seeing that modernization in that underlying infrastructure, but they're really kind of pulling their services up on top of that.
It's interesting. It reminds me of Apple a little bit in the App Store saying, you want to come through us despite the cut, we're taking because we'll make sure that these apps are safe, basically, and it's not going to be malware and things like that. So just going back to the kind of bread and butter business for a second, they've been raising fees a lot. Obviously, it's caused a lot of, I notice it more than ever, people putting up signs about surcharges and passing it on. How much more can they raise price there, do you think?
Yeah, it's always a debating question because the reality is, cards are ubiquitous. Consumers want to use them. We're not going to get away from that at the same time. And the more you're buying things online or even through your mobile phone, there's actually a lot more fraud, about 5 times the level of fraud online than there is in store. So they are actually adding more value. But, I think we'll see sort of a balancing out. There was a lot of pent up. If you recall, early in the pandemic, they had some pricing changes planned. Then they held off on those for 2 years, actually. And so we're just sort of seeing that catching up.
Got it. Interesting. And that's why people feel like inflation's getting worse sometimes, even though the headline's moderating. I guess more of an observation than anything else, but looking back through Visa during 2008, I mean, as late as April, they were saying the consumer looks fine. We see no sign of a looming downturn. I worry about that a little bit when I hear their commentary, which is to say, OK, we know things are great right now. And it is reassuring because other indications sometimes say March was a bad month, but they're saying it was fine, but they can't really see around the corner.
Yeah, you're right. They're seeing just the real-time updates. I guess in certain categories, maybe they get a little bit of a forward look because you buy things like airline tickets months in advance, et cetera. But, as you said, 6 months ago when they gave their fiscal year guidance and said, hey, we think the consumer's doing fine, they scared everyone. But the reality is here we are 6 months later and they are beating they've now beat 2 quarters in a row on top line, and that consumer is chugging right along. Little bit of a bifurcation, though, I might highlight. The more affluent consumer is still spending strong on travel, entertainment, all those, Taylor Swift tickets, et cetera. But they are starting to highlight that they're seeing some trading down in some of the lower income categories. A lot more quick service restaurant as opposed to fine dining, Walmart, versus the more upper end retail.
And that jives what we heard from McDonald's somewhat as well. Lisa, always great to dive in with you. Thanks for your time.
Terrific. Thanks,
See you tomorrow. Lisa Ellis with MoffettNathanson.